One of the most awaited IPOs of this year, and around the festive season, this blockbuster comes by. We're talking about Swiggy, and for the first time ever, we have with us the MD, CEO, and the CFO of Swiggy. You're watching us here on this very special episode on CNBC-TV18. Sriharsha, Majety, the MD, CEO, and Rahul, Bothra, the CFO. With me, Shilpa, Ranipeta. Thanks a lot, gentlemen. First up, festive greetings to all of you and your families, your teams, etc. as well. Now that you're listing, the two most obvious questions that people want to know or want to see is the rate at which your top line grows and what happens to your bottom line. Look at your business. Food has shown contribution positive turnaround, and quick commerce is the one that is likely to reap the revenue growth. On both those parameters, what can you talk about in the near future? What is the kind of sustainable growth rate on the top line and the path to profitability?
Sure. First of all, maybe I can...
Yeah. Thank you so much for having us over today. It's a very special part of the overall Swiggy journey for us. We turned 10 earlier this year, and it's a big milestone, and all of us are very excited about this next stage of life as a company.
Right. So
first of all, happy Diwali to you and all your viewers.
Thank you.
I think it's been it's a pleasure to be here. I think you talked about our growth journey, our profitability. I think these are milestones that we have achieved. In the food delivery business, we turned profitable, not only at the contribution margin level, but at the EBITDA level. In terms of the overall platform growth has been very strong for us over the last 3 years, growing at 32% and scaling well. So overall, we are very happy with the trajectory that each of the businesses are demonstrating.
Right, but you're not saying what the street wants to know, because while they have turned contribution positive for the food delivery business, and they say on the street, and EBITDA. On the street they say ye dil mange more, right? Now that you're listing, you also have a listed peer. With the trajectory that we've seen on them, on a lot of the parameters, they're above what Swiggy is right now, which is not to say that you're any less. It's just that you're at different stages of growth in your life.
Correct. I think, look, there's a lot of context. We each have our own context, and we are in very, very exciting categories. And our strategy, our capital allocation, everything's going to be a function of our excitement and what we can go after in each of these. Like Rahul mentioned, we've demonstrated the profitability in the food business. We feel good about its future going forward. As for quick commerce, I think it's in a once in a lifetime category, and I think we are seeing consumption patterns change for consumers, and there's so much to be done. So our endeavor will be to make sure that we do the fullest of our ability to make sure that we grow and serve customers well and make sure that everything comes together nicely.
But for quick commerce, you recently said that the peak of the investment is behind you, but you're still not a contribution margin positive either. So, I mean, what is the trajectory there for quick commerce? Because even for your peer, that has been the growth driver. Right. So how are you looking at the quick commerce business for you in terms of being, is it also going to be the growth driver for you? And sort of trying to get a sense of the path of profitability on that front also.
See, maybe I'll take this. I think on quick commerce, what really amazes us is the way consumers are reimagining, things or what can be delivered to them. So it's almost like every quarter we have to recalibrate around, what is the number of categories that we have to be there, what is the number of SKUs we have to launch, and there's a recalibration happening. Growth is accelerating. So there'll be a certain amount of, say, new store additions that we'll continue to do. The old stores continue to mature well, which means that they become profitable over a period of time, and the new stores come in because consumers want a lot more.
Right.
So I think it's a recalibration of our overall growth trajectory in line with the demonstrated path to the contribution margin that we continue to will demonstrate.
So let's get a little more specific now. As of the first quarter, you had around 557 quick commerce dark stores. How many of them are mature? How many of them, and mature stores, what is the contribution margins that they do? If you could give us that sense. And you are doing about 980 or closer to 1,000 crores in terms of dark store expansion. So what's the aspiration there? How many are you looking to add? And over the next couple of years, what's the milestone target that you have?
Sure. So Mangalam, I won't get specific because that's information that we have not shared in our first earnings call.
You can get relative as well. Say 30%, 40%, roughly around that much, yeah. Just to give a direction to the street.
Yeah. No, we will give specific numbers and not just directional numbers when we can. Currently, there are regulatory constraints that we cannot talk about. But to give you a sense of how are we planning our overall store expansion, I think store expansion is a derivative of growth. and not otherwise. It's not like we want to add number of stores, which is ahead of even the growth journey. So, calibration will happen according to the growth of the category.
I asked this largely because, the peer has had a 2,000 store target over the next 18 months or so. They're closer to around 800 right now as of the end of the second quarter as well. So the street worries that could you be lagging when it comes to growth, especially at the time when all the other players also are raising a lot of capital, including the leader who's gone ahead and announced a fundraise. So the street is just only worried about y'all not missing out on this growth opportunity. Like, was said earlier, it is a once in a lifetime growth opportunity. So what's your aspiration?
No, we're looking at it absolutely like it is a once in a lifetime growth opportunity. We continue to be ambitious and aggressive about our plans. And like Rahul mentioned, we have very aggressive plans. And I think that is the need of the hour given, the timing in the market. And like Rahul mentioned, I think the store count is going to be an outcome of the growth ambition. And while we're not in a position to be able to talk about the number of stores, rest assured that we definitely want to play to make sure that we...
What proportion of your stores are contribution positive? If that could...
We will give it in our first earnings call.
But I mean, at least in terms of maturity where we are, we're looking for some color on that front.
I think you're trying your best.
All right.
Okay, let's try it this way. How much does it cost to open one dark store?
So in terms of the overall capex requirement, it could vary depending on the size of the store, but anywhere between 65 lakhs to 85 lakhs is what we have seen.
So roughly 986 crores is what you're putting out for a dark store expansion. 65 to 85 would imply closer to 1500 dark stores over the next 18 months or 20 months, depending on the rate at which you deploy it. Would that be a fair assessment? You're not saying anything. I'm just doing the back of the envelope.
I think the overall time to market of starting to deciding to start a store and then launching it is actually less than a quarter.
Got it.
So I think we are in an agile world. I think, as I said, the
so less than 1500 stores adding in less than 4 quarters. That's the headline that we got.
Consumers are reimagining, and we are definitely
Perfect.
going to deliver what consumers are looking for.
No, so are you looking at this, the concentration, are you looking at sort of, populating more or penetrating deeper into the present markets? And how much of it is going to be new markets?
See, I think the new markets, all of us in the category are going through a journey of discovery. I think we are expanding and testing out demand in the smaller cities, and the demand in these cities is going to be
What are early indicators telling you? Actually, that was my next question in terms of smaller cities, because smaller metros, larger cities, larger towns, there's already some sort of proven, it's proof that, it is working, there is demand. But as you penetrate deeper, if you go into smaller towns, do you believe that the quick commerce model as it is in urban cities now can be applied? Can you do a copy paste, or will you have to recalibrate the way the business model works for smaller cities?
I think at this point, we do not know where, let's say, it stops becoming irrelevant, and that's the journey that we're going to find out. But would it work in city number 500, city number 600 with the same operating model? Probably not. And that's why we will need some iterations and some building on top to see if there is a model that can work.
All right. On the food delivery business now, enough about quick commerce. We've tried to probe as best as we could, and you've tried to avoid as best as you could. On the food delivery business, you've turned positive over the last 3 years. We've seen that J-curve effect play out as well. Contribution margins closer to 6.5% right now. The peer at a larger scale is doing a little around 7.5%. What is a steady state contribution / EBITDA that one should look at when they look at the food margin?
No, I think we again can't give specific guidance here, right? But I think from the overall industry standpoint, there are industry reports that suggest that this could be a 5% EBITDA business.
Got it.
And I think the contribution margin trajectory will.
And your current EBITDA in the food business would be?
So we delivered a 0.8% in our quarter one.
Got it. So there is chance for this to quintuple from here, from 1% to about 5% over the future as
See,
it
there is
stabilizes.
obviously the contribution margin expansion journey as well as the operating leverage. What happens in platform businesses is that once you hit a certain scale, the incremental fixed costs that get added is significantly lesser than the overall scale benefit that happens. And we will demonstrate both operating leverage as well as the contribution margin expansion.
So for the operating leverage to play out, what really one needs is y'all grow faster than what you've already grown at, and also at some point perhaps grow faster than the industry, right? What are the things that you all are doing in the food delivery business to grow faster than the industry and your peers?
No, look, I think ultimately, if I had to look at how to grow the category further, there's been so much category activation that has happened over the last 10 years in this, right? And I think if we have to keep growing, the transacting user base for the category continuously over the next few years, at least we look at two big opportunities over there. One is affordability.
Got it.
I think the new consumer that we're onboarding to the platform is not the same as the one who came in like the year 1 or year 2 or year 3. So I think we need to constantly keep figuring out ways to give value and more value to consumers to ensure that the platform is not just built for a user base of 2018, but is constantly evolving to serve the new user of 2024, who's very different. The other one is, I think we are always on the lookout to keep identifying new consumption occasions or use cases that can grow the category. And one example maybe that I can talk about is Bolt, that we launched 3-4 weeks back. Now, we've talked about quick commerce in the first half of this meeting, but you can see how the FOMO is hitting even food delivery. Right? Because we see how much consumers love quick commerce. And maybe it's starting to look like regular food delivery is slower.
Right.
Even if it is under 30 minutes, it starts looking like it's slower, and it's up to us. And we know that there are many consumption occasions. Maybe sometimes you just want to leave for office in 20 minutes, and you probably want a coffee and you can't plan your life around it. Maybe that's an occasion. Maybe you're running between meetings at work and you forgot to have your lunch and you have a craving and you want it quickly. So that's an example, but I think we'll have to keep inventing new use cases and occasions. At a headline level, what I want to talk about in food delivery is we're really, really early in the food industry itself in India. We think like there are so many restaurants, etc., but we don't have that many restaurants compared to any other part of the world. Online food delivery happened before outside eating happened in a big, big way in India. So I think as it is over the next 1-2 decades, there is a significantly strong secular tailwind just because of the GDP per capita growth, which is going to show in the discretionary income going into the restaurant industry. So we have a beautiful underlying rails for the food delivery business. And our job is to constantly keep innovating to offer affordability and unlock new consumption occasions to grow faster than an already fast-growing rails.
That's about growth. What are the tools of you increasing your food revenues faster than what you have been doing already? I mean, there is obviously the take rate, there is the platform pricing, which is now becoming dynamic increasingly. So if you could give us a sense of some of those tools and also tools to reduce costs further.
And if I could just add to that, you spoke about how important it is for you to give value to consumers, new consumers. So how do you do that while you protect your margins also and try to, bring in more revenue streams through the tools that he spoke about?
See, over time and over the last few years, we've also gotten much better at the monetization angle. We've also learned more about how to create value for partners and therefore increase this. So I think we have now gotten really good at managing this whole journey while continuously getting better every day at each of the singular line items. I think the answer to your question isn't straightforward saying that this is one line item that's going to change everything for us.
Right.
Every single line item has been improving for us over the last 1-2 years, and we still have some room in some of the line items. Maybe Rahul can build on it.
See, to add to your question around how do you kind of bring it more convenient to consumers. So we have a very successful subscription program called Swiggy One.
Right.
I'm sure many of your viewers would be enjoying the benefits that get associated with Swiggy One. It's a platform-wide benefit. It gives you free deliveries not only on the food delivery business but also on the quick commerce business, and there are other hosts of benefits that are attached to it. So there's definitely more value that we continue to look at. How do we give our consumers more and more value while continuing to innovate around both affordability, speed, as well as the selection, right? I think we were the first company to democratize food eating in India, right. So to speak, right? And the first ones to scale in the manner that we did. And you should continue to expect that from us.
Okay. What are the markets in which you are absolute leaders versus your peers? And in the markets where you are not leaders, what is your right to win there?
I think, again, specific markets are data that we don't have because there is no syndicated data available around. How do you kind of establish that? I think.
But the right to win is going to come from serving consumers the best, waking up and choosing to really keep.
On those parameters, how far are you as compared to your peers?
We can't go into there is no one such metric that we talk about. We feel good about where we are, and we also feel like we have meaningful opportunities to keep getting ahead. Like this year, we could have looked at it and said, hey, we're delivering fast enough. Maybe this is okay. But we haven't stopped there. We now want to figure out how can we get it even faster. So there is that same restlessness and hunger about each of the metrics. So
No, but I think what he was trying to sort of allude to is also strongholds, maybe not specific cities, right? In terms of geography within the country also, do you have areas, north, south, where you have a much, you have a stronger hold than, say, your peers?
I think for us, we look at this as opportunities more than market shares, right?
But you're right. There are, of course, strongholds for each parties, and the answer for right to win is it's our job to ensure that we create consideration for consumers to try and experience the Swiggy brand. And for that, we'll have to keep doing things better, new things that catch their excitement and imagination. All of this is what is going to give us
The other reason why I asked you that is
consideration.
because Prosas, through its annual report, many annual reports, has suggested that over the last few years, the market share has swung in favor of Zomato as against Swiggy. What explains that, and what are you doing to claw back that market share? Because, I mean, you either lose market share for better profitability prospects, or, the others are a little more aggressive. But on this hand, we've seen them gain market share along with margins. What would you do to claw back that market share with increasing margins?
See, over the years, there have been many ups and downs in terms of share movements. If you kind of look at historically, I think there will be a few quarters that we will gain share, few quarters where competition gain share, and in a competitive environment, that's kind of expected, right? So, but these differences are in the fringes. So India is not a place where there is say one very very dominant player. I think we have a couple of strong players, very very competitive, and that's how it's supposed to be.
Right. While we're still talking about food delivery, I just want to come back to Bolt, right? Zomato tried this with Zomato Instant. It didn't work. It shut down. It tried iterating the service. Then you've come out with the 10-minute delivery. Is consumer expectation for food delivery also really, are they becoming more impatient for food delivery also? And what lessons have you taken from what did not work or what worked for Zomato when it tried the 10-minute food delivery, and also if you could just also touch upon how the early response has been for Bolt. I've tried it, to be very honest. I've tried ordering coffee. It's come in 7 to 8 minutes. But how many? I mean, what's the mode to scale here? Is what I'm trying to understand. Or are you going to stick to the way you've started with the kind of food categories that you've started?
Cool. See, I think the operating models are very different. I think Zomato also tried something earlier, but I think we're all trying to figure out the right operating model to make this work. This is kind of the first time that you're building it on top of the restaurant industry. Maybe we all had some overhang saying in the restaurant industry, maybe you can only do 25 to 30 minutes. But seeing what we've been able to do in quick commerce made us push ourselves harder, saying, no, maybe we can build it on top of the restaurant network as is without having to change too much over there. So yes, I think it has been a journey of iteration. Right now, we feel really good about how consumer uptake is. I'm very glad and excited that, like many of our customers, you're getting under 10-minute food deliveries. And I think, look, about consumer expectations, once they change, and there's no going back. Because in the beginning, even 30-minute grocery delivery was seen as something that consumers didn't want. But within a year, actually, the consumers didn't want 30-minute delivery. They want a 10-minute delivery.
let's talk about the business on the whole. You have the food delivery business. In that, you have the loyalty program. You have the Bolt business in that as well. Then you have the quick commerce business. Then there are other couple of verticals as well. If we had to look at the vertical growth opportunities for each of them, how much of them will grow faster than the company? Which of them will grow at company level? Which will be the margin driver? If you could give us all those, qualitative aspects of the business as one were to look at over the next 3 to 4, 5 years. And is there any other opportunity vertical that you're seeding? Because we saw that come from Zomato in the going out business when they did take over Paytm's live business as well. So what are those verticals that you're looking at as verticals of the future?
Out of home.
Sorry?
Out of home.
Yeah. No, I think, look, if I look at the three categories that we have between the food delivery business, the Instamart business, the out of home, I think it is abundantly clear that, the quick commerce business is going to be the fastest growing. It's also at very meaningful scale.
Typically grows 2x the average or 2.5x the average?
I don't know about typically, we can't talk about like exactly.
You've been around long enough to understand that, I guess.
No, suffice to say that the category is going to grow really fast and will be the driver of overall growth at a company level. And if you take a long enough time frame, they all will be the drivers of margin. And in the short term, of course, food delivery is our most mature business and drives all of our brand.
And see, one of the other verticals that we are very excited about is the acquisition that we did last year. It's called Link.
Right.
Link is an authorized distributor for urban distribution, selling into kiranas. So we are authorized by the various FMCG brands, and we directly sell to the kiranas. I think what we are now obviously trying to do is bring them a faster speed of delivery, larger assortment, and that is something we are also going to enable technology to be able to service them even faster and better, right? So that's one initiative that we're really excited about, and we hope to scale that.
Right. What about the out of home business also? Like he was saying, right? You didn't allude to that, so I'm just coming back to Zomato did the acquisition recently. They're going very big on the events and the ticketing space. You have something called Stepping Out. Is that something, will that sort of be something that will be your answer to that sort of a business? How are you growing the going out?
I think we're looking for answers to consumers' problems, not to competitive moves here. I think we have our own mission statement, our own evaluations of right to win, and we constantly keep experimenting with new things. In the last few years, we've piloted and experimented with things like Swiggy Minis. Recently, there's been some coverage about like a private members club around a concierge called Rare that we've been experimenting. All of these speak to the mission statement that we have, and we will continue to do that. Not as maybe like answers to anyone else, as opposed to answers for problems that we think consumers are facing.
Final question before we wrap this up. I look at your offer document, I look at the valuation that you're seeking. A lot on the street thought that you would come at a value much higher than what actually has happened. How much of the discussion happened during that time, and what led to you all valuing your company at the numbers that you did as against what was earlier perceived?
See, I think we were, both Harsha and I spent a significant amount talking to investors over the last 4 weeks, as you can imagine, in any IPO roadshow. We heard the sentiment. It was a fair price discovery process, and I think investors have given it a certain price, which is what we have come out with. I think it's ultimately for the street, for the retail investors out there to decide whether it is of fair value or not.
All right, we wrap it up with.
Touch upon competition also that we were speaking about earlier for quick commerce. I think that's sort of just one point that got missed out. If you just come back to that, many players are entering the market right now. Large corporates are entering. We saw Reliance entering. There are news reports that Tata is also looking, apart from Big Basket with its super app offering also. How do you see the competition for the quick commerce space, and do you think there is space for 5 to 7 or more players, down the line? How do you see this market settling, and how are you looking at the competitive landscape right now?
All right, cool. See, I think at the outset, I'd like to maybe start by saying that there will be multiple players in any large market that you go after, and I think quick commerce is no exception. So there will be multiple players at the end of it. It's not going to be a winner-takes-all market. The next one is, as for, let's say, multiple players, etc., every category now, if you go back and trace back, even the food delivery business, there have probably been like 25 competitors. Today, it doesn't look like it. Feels like a long-lost memory. But I think many folks will play, and the ones who are building sound, sustainable businesses while serving consumers well will come out on the other side looking good. And we
Where do you
definitely
see like
And
a
you,
mature?
and you consolidate where, say 5-7 years from now, on the
Yeah.
other side, you see Swiggy stick around with Instamart, just the way you all have in the food delivery business, right?
Absolutely, we are excited about our path here, and we definitely will make sure that we come out on the other side looking
Like
good.
a mature quick commerce market 5 to 7 years down the line, like he said, how many players do you think, do you see, in a mature, sort of the way the food delivery business went? Now we've seen it's just, we just have Swiggy and Zomato that is really able to, it's become a duopoly. How do you see the quick commerce that way?
Like I said, I think if you just go by market structure, it is a function of market size. And if, let's say, the quick commerce market is going to be larger than the food delivery market, it'll probably be able to serve more than 2 players. Whether there will be 2, 3, 4, I don't have crystal ball. So I think we just keep doing what we can.
Okay, we'll wrap it up with now a lot of the fun stuff that we've lined up for you. And it has nothing to do as much with your business as it has to do with y'all as customers. What's your favorite order on Swiggy and the most ordered thing, both of y'all?
Paneer kathi roll
From?
from Kebab Corner
Oh,
in Bangalore.
Bangalore, yeah.
Now, I get my coffee from Starbucks. That's my most go-to order.
And on an average, how many times do you order per day or per week?
Across the platform, it would be at least 20 times a week.
What
Okay.
about
In the zip code, yeah, 30.
Instamart?
I mean, across the platform, it's 30. It's changed
No,
over the years.
what's your most go-to order on Instamart?
No, I don't think there is a most go-to order on
Are you
Instamart.
completely an Instamart shopper, or do you still go to the store to buy grocery?
I think
Depending
my household does offline as well as online.
Okay.
It depends on the shopping mission, but a lot of it has moved to Instamart, but it's not like binary. It's not like I don't step out anymore.
Now the tougher question.
Yeah.
Do you all compare prices on Zomato, Swiggy for food delivery and order the one which is cheaper, or you are still loyal to Swiggy?
We are loyal to Swiggy.
Even if the prices are higher?
Yeah.
Okay.
Do you have Zomato on your phone? Have you ever ordered from Zomato?
Yeah, I have tried it in the past. So of course we keep looking at competitor offerings. It's always important to learn who's doing what for the consumer, what we can learn. So we continue to learn.
What
Has
about
there-
you?
Yeah.
Yes, the same answer.
Has there been a time when you looked for something on Instamart and Blinkit was delivering faster, or Zepto was delivering faster, or the SKU was available?
Yeah,
there?
or it didn't, Instamart didn't have it or something.
I think most times it's Instamart which is serviceable better than competition. So
But anyway, I think you can't be perfect every single minute. So there will be some moments where we'll have it. There'll be some moments when they have it. So yeah, I mean, it's common, right? I think you will run out of stuff once in a while. It's not like a magical Akshay Patra that doesn't ever
No, but
run out.
if not Instamart, what's your next go-to quick commerce app? If something's not available, what's your next?
I don't have a default like that.
All right, we take that point. Thank you so much. This was fun.
Thank you. Thank you so much for having us.
Wish you all the best for the IPO and look forward to seeing you.
Look forward
Thank
to seeing
you.
you. All right, thank you. Thank you for
so
your time.
much.